Air Canada has reported a notable third-quarter profit of $2.04 billion, a significant jump from $1.25 billion in the same quarter last year. This increase reflects a favorable shift in several key market conditions, even though the airline experienced a slight decline in operating revenue, down from $6.34 billion to $6.11 billion year-over-year. The airline attributed the growth in profit per share to $5.38, a leap from last year's $3.08 per diluted share. A major boost to Air Canada's bottom line came from a strong international travel demand, especially following Canada's recent decision to lift the cap on flights to mainland China. This policy shift is enabling Air Canada to expand its offerings in Asia, particularly with new and more frequent flights to Beijing and Shanghai. Additionally, Air Canada is actively increasing capacity on other Asia-Pacific routes, capitalizing on the resurgence in demand for overseas travel and business-related bookings. These moves are expected to further solidify its position in the North American and Asian markets. Lower jet fuel prices have also contributed to Air Canada's profit uptick. CEO Michael Rousseau highlighted that the airline revised its expectations for jet fuel prices down to $1 per liter, from a previously forecasted $1.03. The decrease in fuel costs has allowed the company to refine its full-year profit guidance while adjusting for other key contract-related factors. This change is projected to aid Air Canada in meeting its 2024 adjusted earnings goal, which it has raised to approximately $3.5 billion in earnings before interest, taxes, depreciation, and amortization. This forecast upgrade follows a previous range of $3.10 to $3.4 billion. In another strategic move, Air Canada recently announced a share buyback program, aiming to repurchase up to 35.78 million shares. This marks its first repurchase authorization since the pandemic, and the decision is primarily intended to address the stock dilution experienced due to extensive financing during the pandemic. By repurchasing shares, the company is working to enhance shareholder value and re-establish investor confidence. The airline also reached a tentative labor agreement with its pilots' union, which includes a general pay increase of approximately 42% over 4 years, generating an estimated $1.9 billion in cumulative value. This agreement brings stability and a much-needed boost to Air Canada's workforce morale, especially as the company prepares for further international expansion. Looking forward, Air Canada projects a moderate increase in capacity, now expecting a 5% growth in available seat miles for 2024, compared to its previous target of 5.5% to 6.5%. The airline anticipates that its cost per available seat mile will be up by about 2% from last year, which is slightly lower than the prior forecast of 2.5% to 3.5%. This refined guidance reflects Air Canada's ongoing efforts to optimize its operational costs in response to fluctuating market conditions and evolving passenger demand. In summary, Air Canada's third-quarter performance demonstrates resilience and strategic foresight in navigating complex market dynamics. By focusing on cost management, expanding its international reach, and implementing shareholder-focused actions, Air Canada is positioning itself for sustained growth. While some challenges remain in operating revenue, the airline's robust international demand and advantageous cost adjustments in jet fuel have set a promising path forward. Stay subscribed for more videos.